Hello guys, you are welcome once more to Just the Chat. Okay, on today's video, I have something very important to teach you about. This is what most banks use. This is what some smart money traders actually use. This is actually some kind of secret that all trader must know, and adding it to whatever you are currently using will actually help you a lot. So, what is it? Psychological numbers, psychological words, psychological numbers. They are very, very, very important. You might have not heard of it before, you might have seen it somewhere before, but don't have it full understanding. So, on today's video, I'm going to break everything down to you. I'm going to break everything from scratch to advance to you. Like currently, this buy here, I took this buy, and it hit my take profit at about this region here, and that was simply using what psychological numbers, psychological words, psychological numbers. So today, I will walk you through how you can actually make much more profit following psychological numbers, and how you can do how you can improve your trades with psychological numbers. First of all, before we move further, let us look at the dictionary explanation of psychological number, what psychological number actually stands for. So from here you can see that psychological numbers, they are levels in the market, and they are denoted by round numbers in the market. So what do they mean by round numbers? For example, you can say $100, just like you remember when I think Bitcoin, for example, let's use Bitcoin for an instance. When Bitcoin was at 60,000, a lot of persons sold. That was a round number. A lot of persons sold at 60,000, and then remember when Bitcoin fell down to $30,000, a lot of persons bought Bitcoin at that particular price. These are psychological numbers. Okay, these numbers are on every market. You can use them on the forex market, on the synthetic market, and on the crypto market. So on today's video, I will actually explain how you can use them, how you can use them on the forex market. So with this knowledge, you can implement it on whatever market you are trading. So you can see some levels here. I've marked out some levels. I can see this level now. I expect price to move up back from here. Some persons might be waiting for this price to get here. It might get here, but there's also a high probability that this price is going to move up move upward. So I'm currently having some lines on my charts currently. I am a pure price action trader. I don't use indicators. Okay, so this lesson are actually for those persons who are into price action. And then if you are using indicators, this can also help you because you can actually merge it and add it to whatever indicators you are using, so that you can actually have more confluence on your trading. So you can see two numbers on my screen. First, I'm having this one here. I'm having this, but they have different colors. So for better understanding, let me break this thing down for you. Let's say the we actually have two type of psychological numbers. We have the major psychological numbers and minor. Then let's say the horizontal line, the black horizontal line. Let's call them the major psychological numbers. Just follow me closely. Let us call major psychological numbers. Okay. Okay, see the black line, let's represent them as the major psychological numbers. While here coming down to the green line, let's call the green line the minor psychological numbers. Let's call it the minor psychological number. Just follow me closely. These are what most banks use. These are what most hedge fund traders are actually using. You can actually implement it. You can currently see this euro USD is moving upward, and it just hits my psychological numbers. You may be wondering how. All right, I'm going to teach you how you can actually do what, how you can actually spot the psychological numbers, how you can actually draw them, and then how you can use them on your trading. It doesn't matter whatever strategy you are using, it will do what, it will give you more confidence on whatever strategy you are currently using, being it support or resistance, or whatever strategy you are using out there. Okay, this will actually be like a bonus to you. Okay, and also a secret. So let's just say the green line, minor psychological words, they are minor psychological numbers. The grey line represents what minor psychological numbers. The grey lines, they represent what the minor psychological numbers. So how do psychological numbers work? How do you use them? You know, there are some points in the market where a price gets and bounce back. that point may not be a support or a resistance zone. You may be wondering what happened. Why did this market move up? Currently, I told you that this Euro USD is going to move up from here. Are you seeing it just kissed it and now it's bouncing back? You may be wondering how come. These are psychological numbers and they are very important, and you must have what understanding of them. That is why I'm going to explain everything to you. So from how to start from afresh, you can draw them on any time frames. Trust me, you can draw them on any time frames. You can connect them on any time frame. It doesn't matter. Let me take out all the drawings now so that I will explain from scratch. Just follow me closely. Don't miss any part of this so that we understand everything I'm going to currently explain to you. So let us move down to the daily charts. I want to explain some things to you. Let us go to the daily charts. Okay, currently here, this is the daily chart now. I used to know that there are some points in this market. For example, coming. Let me show you something. Are you seeing what happened? See the market got from here, from this point, it came down to here. Okay, I'll take this out. Let me add it again. Okay, so you see what happened from here. Excuse me. Okay, see what happens. Let's say, let me bring in my brush. Okay, so what happens? Are you seeing from this point here? Seeing from here? See the what the market did it drag down to this point? See, it came here. So you may be wondering what happened. These are actually support and resistance, but some of them they are not actually what they're not support and resistance. Market just gets here and do what and automatically reverse. You may be wondering what happened, how come? So remember that I told you psychological numbers are what they are random numbers in the what in the charts, be it the forex market, the static market, or the crypto market, and the market tends to obey these regions. So that is where most banks are waiting for. That's where most institutional traders are waiting for. That's where most swing traders are waiting for. So it would be wise if you're actually doing what following the banks or following the hedge fund traders to actually master the psychological numbers and how to actually do what treat them or actually how to add them to your current trading knowledge for better trading results. Okay, so as I said, I'm currently on daily time frame, so this is how you draw out your psychological numbers. I told you we have major psychological numbers and we have the minor psychological numbers. So first of all, I will be mapping out the major psychological numbers with the black horizontal line. Okay, let's say the black horizontal lines. There will be major psychological numbers. Let's change the color to black. So the psychological number here, let's start from the current price here. The major psychological number here, the round number should be, come here, let me edit this. So you can actually, from whatever chart you are doing, to actually get the accurate psychological numbers, you can actually edit it, you can modify it so that you can actually get the best. So remember, when I modify this now, it automatically shift to the number I actually want it to. So the major psychological number here should be 000. Okay, did you see what just happened? You see what just happened? So the price was currently at this point. The horizontal line was here. See, it just shifted here. So this is the major psychological numbers now. So let us add another. So this is 10000. Then the next one will be 1.0. Its next one will be 1.01000. That will be the next psychological number. So let me add. So whatever you don't understand, don't hesitate to drop them on the comment section. I will be readily available to do what to assist you and respond to you. So the next one, as I said earlier, will be the major psychological number should be 10000. That's one. Okay, are you seeing that is the major psychological number there? This one currently here, and then the major psychological number will be 1.02000. So let us add that again. Okay, just modify it. Remember, you can actually modify it. You can change the numbers to 1.0200, 2000. Okay, are you seeing them? Are you seeing what happened? The market has tested there before and fell down. Are you seeing this? So the next one will be what? 1.0 what? 3000. Okay, so let us go. The next one is 1.0 3000. So let us modify this now. So follow me closely. I will teach you how to actually use them on your trading and how to actually get the best results. 1.03 thousand. Okay, that is it. This is currently Euro USD. I will show you how to use them on gold. I believe you can, if you can use them on Euro USD and gold, you should be able to use them on other forex pairs because of their pips calculation. Euro USD and almost all most of the currency pair they have same pips calculation. Why gold is different. So if I explain Euro USD and gold, you should be able to tag along with others such as USD, JPY, Japanese pairs. Okay, are you seeing this? This is the major one here. So between these major psychological numbers, okay, there are some numbers that are called minor psychological numbers. These numbers are in between. They are in between. For example, now this is 1.00000 and this 1.1 thousand. So the minor psychological number will be in between here. Which will be coming? The minor psychological number should be. Let me modify. That should be the half of these two. The half of these two should be 0. That should be 500. Yeah, I think so. Yeah, that is it. Are you seeing what just happened? The market just tested it and see it fell down. So this connote. Let's connote this. Let's change the color to green. Okay. So the minus psychological number here between this one two it should be 0. Wait, let me bring in it. Let me bring this in. The minus psychological number here should be 1.1500. It should be 1.1500. That is this is the minus psychological number. So we're going to while we move down to lower time frames where you see how this thing reacts. Okay, no matter what strategy you are using, this can improve your trading. Okay, and I will show you how to actually do what, how to use them on whatever strategy you are using, how to get the best out of them, how to react when price actually gets to this to these regions, to these zones. So these are the minor psychological numbers. So let us see what happens. Why is this market currently going up? What were the psychological numbers at this point? So I think here we have 0.96 thousand, 0.96 thousand. Let's modify format 0.96. That is a major psychological number 0.9612. Okay. Okay, this is below. Then the next one should be okay. I hope you are seeing how the markets are reacting to these zones. They're actually an extra form of support and resistance, but this gives you more insight. Okay, these are more significant because you can mark them out in your chart, and when price get there and you see their reaction, you can do what, you can take decisions that will gives you more profit. So the next one should be 7 1.97 1 2 3. Okay. Are you seeing this? So are you seeing this price here? The in between should be here, which that should be 1.164, 1.16500. Okay, that will be the minor psychological numbers here. These two they are major. Let's change the color because those are major psychological numbers. These are major psychological numbers. Okay, these two are their major what psychological numbers. Are you seeing what happened? The market dragged upwards to this major psychological number. It fell down here to this major psychological number. We saw this candle. Are you seeing this reversal candlestick here? And see what market did. See, it went up. Currently, it broke above this major psychological number here, touching this major psychological number. It's coming down here to touch it on the lower time frame, like the 30 minutes time frame. And all we should wait for at this point is a what? Is a reversal candlestick or reversal candlestick pattern. So currently you are seeing the reaction of this. So you may be wondering why look at this point here, this zone, see how they are moving upward. So let us actually bring out our psychological numbers here. Let us bring them out. Our psychological numbers. Let us bring them out. So the psychological numbers here, there should be a major psychological number here, which is okay, this one should be 9.8 thousand. 9.8 thousand. Next one should be okay. Let me bring this 9 point 9,000, 9.9, 99, 99123, 99,000. Okay. Then the in between, this is a major psychological number, a major psychological number. This is it. After this, after 99, we have this. Okay. Then the minor psychological number here should be what in between these two. In between. So what should be in between here? Which should be 85,000. So let me bring in the next major minor psychological numbers. That should be 9.8, 9.8. So that should be 85. 8500. Let's change the color of this to green. Are you seeing this? This is the minor psychological number. See what happened? The market broke above. A test of this minor psychological number. Did you see what just happened? This was what caused the recent buy. So if you had the knowledge of what of psychological number, you should be able to do what? You should be able to harness and make the best decision out of this current market. And this market seems to keep on buying. See what happened. This is a major psychological number here, which the market has just broken. Are you seeing? It touched a major psychological number. It's coming down to this major psychological number, which was broken few hours ago. And now there's higher probability that this market is going to reverse back upward from this current zone. Okay. So the question now is, I believe now you can actually connote your psychological numbers. I believe you can do that. So let us check for gold before I go to how to actually use them with whatever strategy you are using, how to actually use them. I believe currently you can identify psychological number with what I have just explained. So this is also the same for other markets, the crypto markets, the synthetic market, on whatever market. Follow the same procedure, although there are different numbers, there are different pips calculation. Okay, but they all mean the same. They all mean the same thing. So let us go for gold. Let us go for gold now. Let us check for gold. Let us check for gold to see. Okay, this is gold currently. Wow, what a nice chart view here. This is currently gold. Let us see. Excuse me. Okay, this is currently gold charts. This is currently gold chart. Are you seeing that the numbers here, they are different from that of the forex? They're different from that of Euro USD. They are different from that of Euro USD. So this is why let's see how to actually calculate this. Remember, they are no different. All you just have to do, you just get the what psychological round what they are actually round numbers. Okay, this one year to year should be psychological numbers. Then from year to year should be another psychological number. So psychological number here should be 16, should be 1640. Let's modify this 16400 plus 1640.00. Okay, sorry. Point go to 0.00. This is it. So are you seeing this is one psychological number? So the next one will be what? 16 what? That's 1650. The next will be 1650.00. Remember it's a major. Forget the color. I'm going to change it. 16 what? 1650. Okay, so let us change this now. Let us modify this so that we can actually get the accurate points. Accurate in 1650.00. Okay, that is it. Are you seeing it? So the next one will be what? 1660. So the next one will be 1660, which should be around this region. Are you seeing how the markets are actually reacting to this? So these are actually important. 1660.00. Okay, are you seeing this? So there's already high probability that I am waiting for price to get here before I actually take a buy. Okay, yeah, like okay, and let's say for example now you are this kind of person who is using a trend line. You can actually draw these things out, and whenever a price gets to a psychological number, what you need to do is what I'm going to talk next. So there's high probability that if this price gets here now, it's going to move back upward. Okay, so in between this we have a minor psychological number. In between this, we have a minus psychological number, and at the top here should be 70. That was where the market hit and started coming down. So these are actually how to draw psychological numbers, how to implement them to your chart using horizontal lines. But it's actually best for you to do what to um for you to modify them to get the accurate and the best points they actually we reverse from. So psychological numbers, they are actually an extra form of support and resistance that gives you more insights of regions you should be conscious of, either a buy or a sell trend. Remember, it is always important for you to follow the psychological numbers in respect to the trend. In respect to what's to the trend. Following psychological number in respect to the trend will gives you and will produce much more profit than going against the trend with psychological numbers. Although when the market is trending upward, let's say for example a bullish market, psychological number can occur, and then I'll call you back. A psychological number can occur and it change the market direction. So he said depending on the zones, either it's actually most times a major psychological number. For example, now this is gold. So this is where it fell from last. Okay, this is where it fell from last. This is current. This should be this is a major psychological number here, one. Then this one is here. Okay, good. Let's see. Let's see. Are you seeing this? This is the psychological number 1730. Then we have 1720. This is it. Then the next should be 1710. Guess to it here, which is 17 what? 1700. Okay, that's 1700. So these are actually how psychological numbers work. So how do you use psychological numbers to actually get the best out of your trade? So let us go back to Euro USD. So I can explain it with both of them. Euro USD. Okay, here we are. So let us hold on. Here is currently Euro USD now. Are you seeing how the market is still struggling at that particular horizontal, at that particular zone, at that particular psychological number? So let us do this now. So how do you use psychological numbers? First, the first thing you must do is, let's say you have identified the trends, you have identified the trend of a market. According to your strategy may be going against the trend, but I'm using, for example, you are using a strategy that actually talks good of following the trend. So let's say you have identified the trend already, just as Euro USD currently here. This market seems to be a buy market because of the pattern it has created. Are you seeing this? So this market is creating a buy pattern here already on lower time frame. I'm talking of lower time frame on 30 minutes now. You are seeing what this market has been creating. You agree with me that this guy has been creating higher high, giving some lows down. You are seeing it creates impulsive correction, impulsive. Most of the buy they are all impulsive, and the sell they are likely, they looks like corrections. They are because of their little candles, and you can see these Marabuzo's candles. They are much bigger than that of the sell. Are you seeing after this consolidation here, the market went up? Same thing here. I think the same thing here again after this movement. So you can actually say this market is more of a buy, although more confirmation is needed, because from the daily time frame here, if you go down to the daily 24 hours time frame, which is the daily time frame, let's wait for it to load. On the daily time frame, the market has been on a sell for some period now. This is daily time frame here. The market has been on a sell. Are you seeing this? The market has been on a sell for some period now. Are you seeing the market has been on a sell for a long time, all the way from here? But currently, since then, no price has broken above each high. But currently, we just saw that today, which is telling that there may be a change of trend. Saying market has broken above here. If market breaks above here again, that is also a clear confirmation. But what we need to actually confirm this by, we need the market to go up, then correct here, which is the second breakout, which will give us a nice entry. Actually, I will do a video on how you can actually spot fake out and re-breakout. But that is not why we are here today. We are here for psychological numbers. So how to use psychological numbers, and you don't need to get your chart piled up with psychological numbers. Okay, you don't need your chart to get piled up with psychological number. All you just have to do is draw them down, like getting the most important, which are the major psychological numbers, and then wait for price to get there. Then take your trades. So how do you use them is very, very simple. Let's take, for example, you are using this trade that I use is support and resistance. Okay, you use a support and resistance. Let me take out all the psychological numbers now while I explain this. Okay, so let us say you are a trader that is using a support and resistance, and you already know the trend is a sell, and you are this trader who loves following the trend. And let's use the previous charts, the previous market movement. See what happened. The market came down here. So all you have to do is wait for a correction to what a psychological number. When the price gets a psychological number, you see the reaction. Let us go down. Let us add the psychological numbers to this point. There should be a major psychological number here. That should be good. Okay, that should be 1.017 thousand 700, 1.01700, 700. Okay, this is 1.01700 here. Are you seeing this? This is a major what? A major psychological number at this point. Are you seeing what happened? You wait for the market to come down, get the psychological number of whatever you are using. Let's say you are using a trend line. Let's implement, or let us add a trend line to this now. Let's add a trend line here. Let's make use of something like this. Are you seeing this? Are you seeing? So I'm just giving you an example of how you can actually use what psychological numbers depending on your strategy. It is actually like a confluence. You get? It is actually like a confluence. So let's say you are this trader that is using trendline. You see, all you need is the first to touch for trendline traders. See, this is the first touch, the second touch here. So all you have to do is wait for the third touch. So upon market gets to the third touch and it happen to be a psychological zone, a psychological number. Wow, that is actually a perfect trade for you. Did you see how the market respected this? A kiss from here, all you have to do is go down to a lower time frame. This is actually more for day traders. Go down to a lower time frame and watch. Let us wait for it to load and watch out the candlestick reaction at that soon or at those points. Let us wait for the chart to load. It's taking too much time. Okay. I believe my network is. Let us hold on. Let us be a little more patient. So that is how psychological numbers actually works. It is very, very important you have this knowledge. Go to your chart, practice them, see how they work, how they actually work perfectly with your strategy. Okay, then give me a feedback. So, and then whatever question you have, whatever you don't understand on what I just explained, feel free to drop them on the comment section. And don't forget to join my don't forget to join my signal channel, which should be on the description of this video. I will drop it on the description of this video. So let us go to our Euro USD, which is what we are explaining. Euro USD. Okay. Let us wait for it to load. This is currently Euro USD, but this is currently the daily time frame. I need the 30 minutes time frame. Okay. Let us wait for it to load. Let us wait for it to load. Okay, this is it. It has this is the current Euro USD chart. So remember what I explained a few minutes ago, which I talked about the trend line. Let's say you are a trader who uses a trend line as strategy, as your trading strategy, and then let me go to the daily time frame. That was where I actually drew the trend line from. So let us draw it from the daily time frame and then come down to 30 minutes and see how market actually reacted to the daily time to the chart. Following what? Psychological numbers. Psychological numbers are actually very important. I use them most of the time. For systematic, I use them on step index a lot. It actually works more on step index. It works more on step index. Okay, let's use this one here. Is also a psychological number. You seen what happened? So this is it. This is it. Let's use this. Let's take that off. Let's use this too. So remember what I told you. Let's delete all this. Let's take this out. Let's delete them. Okay, this is it. Let's delete this. Remember that I told you psychological numbers, they round up numbers. This was the first, yeah, using a trend line strategy. The second touch, the third touch here. All you have to do at second touch, you have to wait for price to come to this trend line again. So here you can actually take your trade. But upon price getting there, you saw that that point or that number is a what? Is a psychological number. Good and perfect. Nice, nice, nice trade. Go to down to a 30 minutes time frame and wait for what? Wait for a what? Wait for a reversal candlestick. Wait for a what? A reversal candlestick. Okay, this is it. Are you seeing what happened here? This is it on 30 minutes time frame. This is a reversal pattern here. This is an M pattern, which is a clear reversal. But this was the third touch which we needed. This was the third touch, and this happens to be a psychological number. What is the psychological number here? Which happened to be 1.07. Let us add a psychological number there, so we know what we're actually looking at. Let us modify it. Okay, let us modify. I think the reason why we are actually having this here is because I gave this trade on my signal channel. So you can do where to join the signal channel 0.01700. Okay, this is the psychological number here. See what happened? See, the market hit it, few pips above it, it came down, and then it got here again. That was where I gave the signal from, because I already have the knowledge that this is the psychological number one, and secondly, there's a trend line at this point. Simple. You don't have to actually have the whole trading knowledge on earth for you to make profit. All it takes is simple implication of this, of your knowledge, taking actions with them, and then having a proper risk management. Trust me, on the long run, you will make much more profit. Working, not just taking irrelevant trades. Trading is more of patience. Okay, trading is a get rich slow scheme. It is not a get rich. It's not a Ponzi scheme. Okay, so this is it. Are you seeing what happened? Seen this Marabuzo candlestick already from this what is it called, from this um psychological number. All you have to do, you can, in case let's say you miss this one, following psychological number, there are minor psychological number and there are some major psychological numbers downward which you can actually catch. So after this 700, the next psychological number should be the next psychological number here. The next one, this should be a major psychological number. That should be 1.00200. There's one here again, which is 1.0900. Okay, let me draw this out for you. So if you I actually have a video where I talked about psychological numbers for what, for synthetic index. You can actually go back to that, and horizontal, and you can actually go back to that for those who are actually synthetic, so that you can actually get the best out of it. So let's modify this now. Remember, let's modify that you can actually get the number accurately. Let's say we have 0.00300 1, 0.00. We have 0.00. Yeah, this was where we have 1. That was 1.00. Then going downward again, we should also have a major psychological number. That should be 0.9800. This was the first one, 0.17. Coming here, I think we should also have another major psychological number here. There should be a major psychological number here. This should be 0.9. Okay, 9800. That is a major psychological number. Then this is 0.981,000. Okay, then here should be 99. Okay, I think I've imputed this before I deleted. Then there should be let's modify this should be 9,000. Then coming down here, the next one should be 9. This one should be 97,000. Then the in between is what is where we have our minor psychological numbers. Okay, this one here is a minor psychological number. Remember, this is a major psychological number here. This one here is a minor psychological number. The major psychological number here is what is 1.00000. That is a major psychological number here. This one here is a minor psychological number. Why I gave this Well, let's say you miss this first one here, see what market came down here. All you have to do is wait for market to get to this minus psychological number here, and then you sell. Simple and simple, very cheap and simple. So whatever you don't understand about this psychological number, feel free to let me know in the comment section. Okay. So for now, remember, please don't forget to click on the subscribe button, turn on the notification bell, for I'll be uploading more useful content. Okay. For now, bye. Remain blessed until we meet again. Remember, there's something you must know about trading. This is what most traders always neglect. No market trends all the time. No range sustains all the time. No strategy works all the time. This is one reason you must always manage your risk. Okay, for you to remain in this business, you must manage your risk. So bye for now. Until we meet again. Bye bye.